Most people thought the housing market would cool down by now. I remember hearing the same thing over and over again. Once interest rates go up, home prices will finally crash. And honestly, that made sense to me. If borrowing money becomes more expensive, fewer people should be buying homes, right? But here we are. Mortgage rates are still around 6.5%, and home prices in many areas are hitting new record highs. So, what is actually happening? Why are homes still so expensive? Why are buyers still entering the market? And what should regular people even do right now? Because I'll be honest, for a lot of Americans, the housing market feels completely disconnected from reality. A few years ago, people could buy a decent home with a manageable payment. Now, I look at some monthly mortgage payments and think, how is the average person supposed to afford this? The monthly payment is the real shock. A lot of people focus only on home prices. But what really matters is the combination of price and interest rates. A $500,000 house at a 3% interest rate feels very different from a $500,000 house at 6.5%. The payment difference can be massive, and that's where many buyers are struggling right now. But here's the interesting part. Even though affordability is worse, prices still haven't dropped much in many markets. One of the biggest reasons is inventory. There simply are not enough homes for sale. Millions of homeowners locked in mortgage rates between 2% and 3% during the pandemic years. And if I had a 2.7% mortgage, I probably wouldn't want to sell either. Because the moment someone sells their home and buys another one today, their monthly payment could jump dramatically. So many homeowners are staying put. That creates low supply. And when supply stays low, prices can remain high even when rates increase. That surprised a lot of people. Another thing I've noticed is that buyers have changed. During the low rate years, many people bought because money felt cheap. Now buyers are more cautious. People are calculating monthly payments more carefully. People are asking harder questions. People are stretching budgets less aggressively. But despite that, there are still people buying. Why? Because life keeps moving. People still get married, families still grow, people relocate for jobs, some people are tired of renting, and some buyers simply have high incomes or large down payments. Not everyone is struggling equally in this market, and I think many people forget that. Now, personally, I think one of the biggest dangers right now is emotional buying. I understand the fear. People worry, if I don't buy now, prices will go even higher. But I also think buying a house you truly cannot afford can become a long-term financial burden. A home should give stability, not constant financial stress. And I think a lot of people today are buying based on maximum approval amounts instead of comfortable monthly payments. Those are very different things. Just because the bank approves someone for a certain amount does not mean life will feel comfortable after the payment starts. Because home ownership is not just the mortgage. There's property tax, insurance, maintenance, repairs, utilities, and unexpected costs. Everything adds up, and I think many first-time buyers underestimate that part. Now, does this mean nobody should buy a home? No. I still believe real estate can be a powerful long-term asset. Over long periods of time, home ownership has helped many families build wealth. But timing matters. Cash flow matters. Job stability matters. And I think people need to stop treating home ownership like a race. Sometimes waiting and improving your financial position is smarter than forcing a purchase. Sometimes renting temporarily is actually the better financial move. And I know some people hate hearing that, but I think financial decisions should be based on math and lifestyle, not pressure from social media. Because online, everyone makes it seem like buying a home immediately is the only path to success. But real life is more complicated than that. I think the housing market today is creating a strange divide. People who already own homes with low interest rates are in a strong position. Meanwhile, many first-time buyers feel stuck watching prices run away from them. And that frustration is very real. So, what happens next? Honestly, nobody knows for sure. If rates fall significantly, demand could increase again. If the economy weakens, housing could slow down. If inventory rises, prices may soften in some areas. But I think one thing is becoming clear. The housing market is no longer easy. People have to think carefully now. And maybe that's not entirely a bad thing, because for a while, housing almost felt too easy. Now buyers are being forced to slow down, calculate risk, and think long term again. And honestly, that may create smarter financial decisions in the future. At the end of the day, I don't think the question is simply, should I buy a home? I think the better question is, can I comfortably afford this home while still building a healthy financial life? Because a house should support your future, not trap it.